financially sound is Fannie Mae?
Fannie Mae is very financially sound. We have the highest, very financially sound. We have the highest, very financially sound. We have the highest capital classification.
But if your capitalization and the rest of it is as strong and sound as you say, why is this Treasury plan, this Bush administration plan necessary to help you out?
There's a lot of uncertainty out there because all the capital markets, the lending markets, are really built on confidence. Confidence that homeowners have that they can buy and sell a home, move to the next place, that banks can make the loan, that those loans can be sold to Fannie Mae or Freddie Mac and traded around the world. Confidence has gotten very jittery over the course of the past quarter or so. And as we saw a very tough week in the markets last week, I think everybody agreed, given the importance of these companies, that there be a strong backstop in case that kind of lack of confidence and that kind of jitteriness continued for too long. Past couple days have been better, so we're hopeful.
But as you know, there are critics, Daniel Mudd, who say that Fannie Mae has brought this on itself to some extent by resisting requirements that you raise the amount of capital you have that would have put you in stronger shape to withstand the kind of crisis you face right now?
Well, we have built capital. Over the course of the past year, we've added about $15 billion to our capitalization. Nobody certainly predicted that we would see a trough of this depth. Now that we see it here, we started immediately to raise capital. We've built it up, and we're fighting our way through.
Well, how likely, assuming this were to pass the Congress, and that's not certain yet, how likely do you think it is that Fannie Mae would take advantage of what's in the package? There's line of credit, or that the Treasury would actually buy stock in the company?
I think it's very unlikely, and I think everybody that has described it, whether Secretary Paulson, Chairman Bernanke, our regulator, Director Lockhart, as a backstop in case things turn out to be different than everybody predicts. What we fully intend to do and what we are doing is running the business in a prudent, responsible way, making sure that that money is still flowing to communities all around America. I mean, we need that more than we've needed it ever before, so we're keeping that going. But having that backstop there, I think that this is the right time to think about it and talk about it. I don't think we'll need it.
But as you know, there are those who say, okay, what's happening here is that this is going to be potentially a federal bailout of a quasi-private company to the tune of, tens of billions of dollars at least. Is that a fair characterization?
I don't think it is, Judy. I think that the right characterization is a backstop during a time that the market is building confidence. We've talked about doing this for a period of about 18 months. A lot of people see us moving through the crisis in that period of time. So there's a backstop during that period of time. And any type of interactivity with the government from a financial standpoint, folks have talked about a loan or an equity investment on normal commercial terms, not anybody giving anybody money. And I would point out in that, Fannie Mae has never taken a penny from the federal government.
Never taken a penny?
No.
Because of the way you're structured?
Because of the way we're structured.
Well, I want to ask you about that because even your supporters point to what they say is sort of an inherent tension in the definition of Fannie Mae and Freddie Mac. As a private company, you hold assets, you generate earnings, you want to do the best you can for your shareholders. On the other hand, as a company that was chartered by the federal government, it's your job to find housing for people who need it, to take risks. Are those goals inherently incompatible with one another?
I don't think they're incompatible, but you're exactly right to point out the tension. That's the tension that was put into the system when it was created. We've had a policy in this country going all the way back to World War I that said we want people to own a stake in communities. We want them to live there. We want to build those communities. Families stay together. People get educated. The country's a better place for it. What can we do to facilitate that? And the system we chose in the United States was to have private investment go to make that happen. In other countries, taxpayer money goes right into it. In this country, it's private investment gathered from all around the world by Fannie Mae and Freddie Mac and put to use in American communities. That's why most Americans can rely on getting a mortgage, being able to buy and sell their house, and being able to build those strong communities. So it's a tension, but it's a tension that makes the system work.
Now, it was reported today that some of the Democrats in Congress want to add a requirement on this rescue proposal that would essentially have the government approving the pay package, the compensation package for all Fannie Mae and Freddie Mac executives, including you, of course. Is that something you're prepared to go along with?
Well, I mean, I think if we ever got to the point that we needed that backstop, certainly, there's a lot of accountability should be there. I don't think we're ever going to get there, and I think the main point is back to the investment.
And when you say get to that backstop, you mean if this rescue plan were to be actually triggered?
Yeah, that's right. That's right. And we don't intend on that. We're not managing to that. I think it's very helpful in terms of restoring confidence. Right now, all of the burden has been borne by those that have invested in Fannie Mae. So back to your point, not a penny from the federal government. We've borne this through the share prices, through the private investment in the company. That's the way the system was supposed to work. But we should also have the chance to use that private investment to recoup the money, build back up, go through the troughs to the other side. And on the other side, there's a terrific market for home ownership, for investment in homes, for mortgages in this country. And so that's why we're pretty optimistic longer term.
Something else that has surfaced in the last few days is this sort of ongoing, bubbling criticism of Fannie Mae and Freddie Mac. You've spent something like $170 million over the last 10 years to lobby lawmakers to get favorable treatment. You have friends in high places, people working for you who've been in and out of government. Those critics say, and I'm quoting here, you've used your clout and your unusual status to almost create a regulation-free zone for yourselves. How do you answer that?
Well, we are out there every day making the case that we do want to have a stronger regulator. There's a bill before Congress right now to develop a world-class regulator for Fannie Mae and Freddie Mac, and we're in favor of getting that done. There's never been a time like now to see, as the stress in the system emerges, how important it is to have that regulator on site, and that regulator able to stand up and say, I'm saying these companies are good. Our regulator has said that, but we do need to have the normal type of regulatory powers that you would see in banks or other large financial institutions. We're not arguing against that at all.
But it's not too late? I mean, why wasn't this something that was pushed for earlier?
Well, we've been pushing for it for a couple of years through a couple of Congresses, and there's probably somebody else you should ask why it's taken so long. There have been other priorities in Congress, let's say.
One last thing I want to ask you about. The head of one of the nation's largest investment banks at J.P. Morgan Chase said today he expects the home mortgage crisis to get even worse. He sees it already slipping out of just the subprime loans into the so-called much more sounder loans. And he's saying we should expect much worse in the weeks and months to come. How do you see it?
Well, we think the rest of this year is going to be pretty tough. We expect home prices to decline into next year as well before you see a recovery. There was a lot of lending. There was a lot of overconfidence perhaps in the housing market. That has certainly come out of it. And as home prices kind of return to a more normal, sustainable level, and as the type of mortgage products that are out there become safer and sounder, we're restoring the market back to kind of a comfortable center. Part of that comfortable center is the business that Fannie Mae does, and as that happens, then I think the market will start to resume a pretty nice course of growth.
And quickly, how essential is this rescue plan?
It's an important backstop to make sure that there's confidence in this part of the market. We're a large company, but we're in one of the largest financial markets in the world. That's an important market to have good confidence in. And I think through this process, a lot of officials have looked around and said, these companies are important. They're at the center. Let's make sure they're working, and let's make sure they're safe.
Daniel Love, the president of Fannie Mae. Thank you very much.
Thanks for having me.